Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty as well as the different asset classes. Now first of all, just a general disclaimer. This video is just for an educational purpose. Consult your financial advisor before investing or trading. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that Nifty has rallied sharply. The rally after when Nifty broke out from the levels of 18,888 for four consecutive weeks, Nifty and Bank Nifty had rallied sharply. It was a 90-degree move, and market has entered into overbought territory. And because of the monthly expiry, some sort of exhaustion was also seen. There was lack of follow-up buying, so we were expecting some sort of profit booking or consolidation at the higher levels. And we have discussed in our last video that at least for the last week we might see some sort of profit booking at the higher levels, and we might see some volatility coming into picture at least for the last week. Now, as we discussed, the market performed on our expected line, and for the week, Nifty ended on a negative note. So now, let us directly check out the Nifty daily charts, and we will try to figure out what could be the trend for the next week. Now, this is the Nifty daily chart, which I would like to just this is Bank Nifty. Let me show you the Nifty daily charts so that we'll have a clear view. Nifty has been moving in a sharp 90-degree move, at least for the four consecutive wave. We can see this. This is the daily chart. Now let me put the weekly charts. So in the weekly charts, you can clearly see, the green candles, four consecutive green candle, one, two, three, four, and fifth, which was the last week, which was a green candle. It was some sort of spinning top. I would not call it as a spinning top because it is an inside week, but it is just what we call as an indecisive trend. But the candle is red. So the important and crucial support, at least for the next week, is 19,562, the spot levels, and last week support was 19,563. So if it breaks those levels, then we might see further profit booking coming in from those particular levels. So as of now, you can see RSI also. Let me stretch out the RSI. See, you can see the prices are going or witnessing weakness. RSI has already given a negative crossover from the oversold region. Currently, RSI has entered into this particular trajectory. Now, this is showing some sort of weakness at these levels. So maybe further we might see uh, weakness coming in at the higher levels if there is a pullback on Monday. So definitely it is uh, uh, indecisive in nature on the weekly charts. So now, as of now, you can see, the markets are uh, witnessing some sort of exhaustion at the higher levels. Now let us discuss the important supports and resistance level in the Nifty for the next week. The first support in the Nifty is placed at 19,563 is the first support. Below that, the second support is placed at 19,433 is the second support. And below that, the third support for the next week is placed at 19,303. These are the crucial supports for Nifty for the next week. Whereas on the upside, the first resistance is placed at 19,716 is the first resistance. Above that, the second resistance is placed at 19,887. And above that, the third resistance, which is the lifetime high, 19,991. These are the crucial supports and resistance level in Nifty for the next week. Traders should just try to follow this level or look out for these levels and trade in the direction of the primary trend. As of now, the primary trend is bullish, but for the time being, we might see a counter uh, uh, rally or counter correction from these levels, or further correction from these levels if 19,562 is broken in the next week. Now let us discuss, the important derivative data of Nifty calls. In Nifty calls, we will see on the screen. In Nifty calls, the action was seen in 19,700 calls, then 19,800 calls, 19,900 calls, and 20,000 calls. Now here you can see the most important thing is, the drop in the option premium, which is clearly indicating that smart money is already into writing strongly out of the money calls. You can see the implied volatility is low. It is between 8.14 to 9.48. Now you can see the rise in the open interest. There has been a change in the open interest, but in 19,800 there has been the shedding in the open interest, which is clearly indicating that there is some sort of profit booking uh, for by the call writers. But looking at, the most probably the volumes at 19,700, this could act as a major resistance, because the volume and open interest concentration is very heavy at 19,700 mark. So if it breaks and closes above 19,700, then only we might see an extension of rally towards 19,900, or else we might see further profit booking from those levels. So now, friends, let us analyze what we can observe in Nifty puts. In Nifty puts, the action was seen in 19,600 puts, then 19,500 puts, 19,400, and 19,300 puts. Now here you can see rise in the open interest, rise in the volume. Implied volatility is between 10.42 and 10.71. Um, the option premium is so-so. It is neither positive, neither negative. It is flat. So still, the market participants, I mean to say, the smart money might be waiting for some crucial levels to be broken, and if that is done, then we might see further sell off coming in at the from those levels. Now here you can see, most particularly at 19,600, there is a strong open interest concentration, as well the volume concentration, and second is 19,500 also, where the volumes is also high and open interest is also high. So as I said, chartically 19,562 is the crucial levels, and on the derivative data 19,500 is the crucial levels. So most probably 19,500 could act as a strong support. Now if it closes below 19,500, then Nifty might slip down or drift down to the levels of 19,300 in the next week. So looking at this data, Nifty uh, as the closing on the Friday, as on the closing on the Friday, it is trading on the edge. If the supports are broken, then further profit booking cannot be ruled out. So friends, now let us check out the Bank Nifty daily charts. In Bank Nifty daily charts, we have been discussing regarding the positive trend, where Bank Nifty has already traded positively, but on Thursday and Friday we saw some sort of profit booking coming in from the higher levels. And again, on the in the last week video also, some sort of exhaustion or profit booking cannot be ruled out, as the markets were entering into overbought territory, and lack of follow buying was also seen in Bank Nifty. You can clearly see. And after that, some sort of exhaustion was seen, and there was a, an attempt to break the lifetime high, but that was never challenged, and selling pressure was seen from Thursday onwards. And Bank Nifty ended on a negative note. This is the daily charts. Now let me stretch the RSI. RSI has also witnessed or seen a negative crossover, though it is not into overbought territory, but still, the signals are negative, weak at these levels. Now let me check out the Bank Nifty weekly charts. In Bank Nifty weekly charts, you can clearly see some sort of weakness was seen. It is an inside weak candle, but the candle is green, red, inside a green candle of the previous week. So again, the trend seems to be slightly weak, but as I said, looking at the daily charts, the crucial support in Bank Nifty would be the Friday's low. Now, what is the Friday low? The Friday's low is 45,238. So if it breaks 45,238, then there are chances that Bank Nifty might drift down to the levels of 44,500 to 44,600 mark in the next week. So most probably the charts are looking weak, oscillators are also weak. Any pullback might bring in selling pressure at the higher levels looking at the charts. Now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 45,238. Below that, the second support is placed at 45,085, and third support is placed at 44,695. On the upside, the first resistance is placed at 45,727. Above that, the second resistance is placed at 46,096, and third resistance is placed at 46,369. These are the important supports and resistance level in Bank Nifty for the next week. Traders should just try to watch out this level and trade in the direction of the impulsive wave. If the impulsive wave is on the upside, then trade positive. I mean to say trade long. If the impulsive wave is on the downside, that means if it is making lower tops, then try to go short if the crucial levels of the Friday lows are broken. So friends, now let us check out the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 45,800 calls. Above that, 46,000 calls and 46,500 calls. The most important thing which I would like to uh, highlight is the drop in the option premium, which means the smart money has already into writing strongly or heavily out of the money calls. Again, implied volatility is entering the danger zone. It is between 11.43 and 12.33. If there is a gap up opening, then we might see implied volatility going into again into a danger zone, which might bring in call writers at the higher levels. Now here you can see there has been a rise in the open interest option. Open interest is also changing on positive side, but on 46,000 calls there has been a drop in the open interest. I mean to say there has been a shedding in the open interest. So maybe 46,000 could act as a major resistance from these levels. So if it closes above 46,000, then only there are chances then that Bank Nifty might rally towards the level of 46,500. But looking at this particular data, most important thing, I am not looking at the shedding also, but I am looking at my focus is on the drop in the option premium and the implied volatility. These two data are indicating that we might see selling pressure coming in if there is a gap up opening or a positive opening on Monday. So those who are long should be cautious at the higher levels, should try to book profits, and those who want to go short can look out for the downside breakout and then build short positions. So friends, now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 45,400 puts, then 45,000 puts, and 44,500 puts. Now here you can see rise in the all volumes, rise in the open interest. There has been slightly change, positive change in the option premium. That means smart money might had started buying slowly and gradually Bank Nifty puts, so they might feel that, or they might be thinking that Bank Nifty might see further profit booking or further sell off from these levels. Now here you can see the implied volatility. Most important thing is implied volatility has already entered into danger zone. It is between 12.10 to 13.33. So as I said, now here also the implied volatility is going high. So maybe if there is some sort of gap up opening, then again we might see sell off coming in. But if there if Bank Nifty takes or try to find support around 45,000, then we might see Bank Nifty consolidating below around 45,000. Only if Bank Nifty breaks and closes below 45,000, then there are chances that Bank Nifty might drift down to the levels of 44,500. But looking at the call data, there is a heavily call writing. So there are chances. Looking at this data, uh, 45,000 could act as a very strong support. But if we look out the implied volatility of calls and the option premium, we feel or we feel that 45,000 might be breached next week, and Nifty Bank Nifty might drift below 45,000. But once one needs to watch out for 45,000, how Bank Nifty is behaving at those levels. If that is breached and close below that decisively, then there are chances that net another 500 points can be taken out in Bank Nifty from below 45,000. So, friends, now let us come to the final segment of our show, which is positional call. I've identified one stock from the power segment. The name of the stock is Tata Power. Let us check out the daily charts of Tata Power. Now, this is the chart of Tata Power. You will see on the screen. Yes. Now, this is an inverse head and shoulder breakout in Tata Power. You can see there was a huge volume on breakout. On Friday, the stock was trading positive with 6% gain, and this breakout was supported with very strong volumes. Not only Tata Powers, but the whole of the power sector was very bullish. Uh, you can see NTPC, you can see Power Grid, RAC, each and every stock in stock, NHPC were trading positive. So if such kind of breakout is happening in the stock supported with strong volumes, then this is a clear indication that the sector as a whole, and again as an individual, because I've identified the stock for this positional view, this stock might give decent return in short to medium term. So this is an inverse head and shoulder breakout. This is a reversal pattern. RSI is also showing positive crossover. Volumes are also on the rise. So stock might give positive returns from these levels. So short-term traders, positional traders, swing traders, investors can accumulate the stock on dips to 228. The current market price of the stock is 234.65. If there is a cool off in the stock in the next week, one can accumulate the stock around 228 on dips for an upside target of 256 in short to medium term, which I consider at least maybe for next 3 to 4 months from these levels. So stock might give a decisive or a positive trend in the coming months. So one can look out for this stock, and one should keep this stock in the long term portfolio also, because this reversal pattern is indicating that there are chances that stock might test the lifetime high, which is 298 in long term means more than 12 months. Maybe in next 12 to 18 months the stock has potential to test the levels of 298. But as of now, yes, for long term investor also one can buy or accumulate the stock on dips. But as of now, I have watching out for short to medium term, which is the target of 256. So friends, thank you very much for watching the show. Any comments you can give in the suggestion box, and have a nice trading week. Thank you.